Hello, friends. I'm your host Girish Kulkarni, and I welcome you all to the brand new episode of Easy GST for you. And today's episode is very special because we have finally got a clarity, come explanation on the long pending issue of taxability of directors' remuneration under GST regime. Today, the circular number 140 by 10 by 2020 has been issued by GST Policy Wing of Ministry of Finance. And today on 10th June 2020, they have tried to explain the taxability by assessing the various provisions of the Act, read with some notifications, as well as the procedural part and the conceptual framework around the directors and the company. So let's try to assess the issue which has been clarified by the CBEC. But before that, I just would like to remind you all that we had conducted a 15 days online GST course, and in that course, on the last day, that is 15th day of that course, we had a topic for discussion which is related to the current issues in GST regime, and one of that was this advanced ruling authorities pronouncement in case of Claycraft India. And there this issue was discussed at length by me, and I had given my views about the taxability of remuneration paid to the directors, which was at that time against the pronouncement which was given by the advanced ruling authorities. I am giving you a link of that video in the upper side corner. You may go and check that video. But today, more or less, the same thing has been clarified by the CBEC, saying that the taxability will depend upon the facts of the case, and what are those facts, how that taxability will differ. That thing we are going to discuss during today's video. So let's see what they have to say about it. So this circular is headed as clarification in respect of levy of GST on directors remuneration. Now, why there was a confusion as far as this remuneration paid to the directors is concerned? So if you see, there are two specific areas in GST Act. One area which is Schedule 3 of CGST Act. So Schedule 3 consists of certain entries which should neither be treated as supply of goods nor to be treated as supply of services, and hence the levy of GST does not hold good in case of such transactions. Now, one of that transaction was services by an employee to the employer in course of or in relation to his employment. So this was one aspect. The second aspect was circular notification number 13 by 2017, which gives a list of such entries which are services which are covered under reverse charge mechanism, in which there was entry number 6, which talks about services provided by the director to the company, in which company is liable to pay tax on reverse charge basis. Now, one entry says that services which are covered by employer-employee relationship, which means that services provided by the employee to the employer, and which are in relation to the service contract or an employment contract, those are neither supply of service nor supply of goods, and hence there is no taxability. And another thing says that in case of services provided by the director to the company, then the company has to pay tax on reverse charge basis. Now, in case of any company where director is providing certain services to that company, which aspect is concerned to this specific transaction is the issue under consideration. And hence there was a lot of debate, and that debate went to a next step with the advanced ruling authorities pronouncement in case of Claycraft India, wherein it was decided that the liability of payment of remuneration, GST on the remuneration is with the company. So company has to pay the transaction is liable to GST. So there were certain facts which were presented in that particular case by the proponent, as well as the analysis which was made. frankly, if you see the order of that particular AAR, nothing was made much clear, or the clarification which was given by the authorities what was not in detail as to why they considered it to be a taxable transaction. But considering the facts of that particular case, which was binding on the particular proponent itself, where that the transaction was taxable. Now, after that, what happened is across the country, few of the authorities started issuing notices based on this particular advance ruling and applying similar, taking up the ratio from that advance ruling. They started applying these conditions and tried to catch hold of some of the companies wherein the remuneration was paid to directors and which was treated as a schedule 3 transaction and tax was not charged. So such cases were started. So considering that, various references were made from trade and industry seeking clarification as to whether GST is leviable on directors remuneration. Now this particular circular explains as to when it should be made taxable and when it is covered by schedule 3. So there are both categories. We will have to assess each and every case, and we have to see that whether the case fits into the taxable category or the schedule 3 transaction. So how it is to be decided? Usually speaking, there are two types of directors which we can broadly categorize the directors into. One is that one is that the company's independent directors, which are in terms of the section 149(6) of the Companies Act 2013, and directors who are not the employees of the said company in that case. And second category is that whole-time directors or other directors which are the employees of the said companies. Now let's try to assess this concept first. Key, what is independent director and what is this whole-time director? So basically, those are the independent directors which are treated as a third party to the company, but who will also act as a guide or a watchdog kind of a role, which is broadly associated with their functions, and their functions is more or less including the propriety aspect of the business, whether the shareholders funds are applied properly to the business activities, whether the business is run properly, what is the corporate credibility, whether the corporate governance and other things which are to be maintained at a certain level, are those being operated properly, basically risk management, etc. So those are the responsibilities of the independent directors. And none of the cases, the directors who are independent directors are employees of the company. So in none of the cases, mostly we see that the employees are appointed as independent directors. Usually those are the third parties. Whereas in case of whole-time directors or managing directors, there may be cases where these are employees or these are not employees, and these are the some of the professional services are taken from the directors who are covered under the second category. Now considering these two categories, now let's assess the taxability. So in case of a whole-time director, there are two parts again. The whole-time director can be in employment of the company. The whole-time director can also be a third party who is providing professional services in addition to his role as a employee of the company. So those two category of services should be applied separately as far as GST taxability is concerned. And second is independent directors. So directors which are not the employees of the company. So from part A and part B, in both cases where the director is performing services which are not covered by the employment contract. So for example, there is a whole-time director and he has a employment agreement with that particular company, but he performs certain services which are outside the purview of that particular contract, and for that he is raising certain invoices as for professional fees, etc. Then that particular area will be made taxable because that is not getting covered by the employer-employee relationship. But that whole-time director, whatever services he is providing in the scope of that particular employment agreement, or the contract of employment, those are covered by the services provided by employee to the employer under the service agreement or service employment. So those are covered by Schedule 3 and should not be made taxable because that is neither supply of goods nor supply of services. Now coming back to the independent directors part, independent directors are never the employees of the company, because there is a specific condition, rule 12 of the company's rules 2014 makes it very clear that such director should not have been employee or proprietor or a partner of the said company in case of the 3 financial year immediately preceding the financial year in which he is proposed to be appointed as uh, as a independent director in the said company. So we may clearly assess that he is no way concerned or associated with the company's employment as such. So that particular relationship is not covered by Schedule 3, and that, as it is not covered by Schedule 3, it is purely service provided by that particular person. So if that is chargeable or if certain fees are paid, professional fees are paid, in that case that will be covered by services provided by director to the company, which is chargeable under reverse charge mechanism. So now based on these two things, it is made clear that first and the foremost thing that we are considering to categorize the remuneration paid to a director, whether it is taxable or not, the base for that is the contract between the director and the company. If the contract is of employment, that may happen only in case of managing director, whole-time director, etc. That may not happen in case of independent directors, because independent directors as it is are not the employees. So if it is in the course of employment, such as whole-time director, managing director, then all such duties which are performed in under the employment agreement and the salary which is paid by the company to that director for that uh, performance of the scope of employment agreement, then such payment will not be covered by the taxability levy of GST, because that particular transaction is covered by Schedule 3 of GST Act. Secondly, if the contract between the director and the company, maybe a whole-time director, maybe a independent director, if it is not of employment, then in that case the services are chargeable under GST, and that charge will be reverse charge mechanism, so the company is liable to pay taxes on behalf of the directors. So now that has been made clear. Also this circular talks about tax deduction at source. So it says that identification of treatment in Income Tax Act 1961 is also corroborated with this particular fact. So whether the TDS was deducted under 192, which means salary head, or it is deducted under 194J, etc., which is of professional services, technical services, etc. So in that particular case, if it is salary, then it is covered by Schedule 3, then there is no chargeability. And if it is covered by 194J, it is professional fees, it will be covered by reverse charge mechanism. But if you ask me, the tax TDS under which section is done should not be the criteria for deciding the taxability under GST. Whether the TDS is deducted under appropriate head, whether the provident fund, etc., PF, ESIC, PT, etc., all the implications of being a person into employment are applied properly or not, whether the procedure was followed for that. All these are corroborative evidence and play a very vital role in proving the facts that it was the engagement was from employment perspective or not. But that is not the final foolproof evidence of the fact that the taxability of GST should be categorized. Because if there is an employment agreement and by mistake company deducts tax under 194C or 194J, in that case whether it will be made taxable just because the company wrongly deducted the TDS, the answer is still no. So base will be the contract, For proving that there was a contract and it was properly executed between the employer and employee, there are other evidences, corroborative evidences, which should be the employment agreement, the tax deduction by the company, the resolutions passed, then the filing of MCA which was done, then the PT, ESIC, PF, etc. compliance which is concerned to the employment contract is concerned. All such are additional evidences and shouldn't be made as a prima facie, criteria to decide the taxability. But yes, the contract between the two parties play a key role, and all others are ancillary facts which are to be considered for proving one's case. So in this manner, the confusion has been ended up by the Central Board of Indirect Taxes and Customs by giving the clarity over the issue that whether the tax is leviable in case of remuneration paid to directors. Just to sum up whatever discussion that we had, simply you have to look into two things. First of all, whether there is a contract of employment between the director as well as the company. If there is a contract, it is covered by Schedule 3. There will be no implication of GST as far as the services are covered, services provided, and the scope of contract is same. Over and above anything provided by the directors to the company, which is purely in nature of professional fees, etc., that will be covered by taxability, that will have a levy of GST, but under RCM. In case of directorship such as independent directors, obviously there cannot be a employment contract, and hence the payment made in such cases will be covered by the levy of GST. To sum up, guys, these are the two important takeaways, and I hope that now the issue has been made clear. You can see the link of the video wherein we had a detailed discussion on this topic earlier. So I restricted my discussion today on the respective points which were mentioned by the circular only. So I hope now it is very clear to you, and the long standing debate comes to an end with this circular, hopefully. Thank you so much. And I also hope that such notices which were issued based on the advance ruling of Claycraft now will be withdrawn or will be concluded in a positive manner by the authorities. And with that hope, I'm ending this video. Thank you so much. Don't forget to like, share, and subscribe to our channel, Easy GST for you. Thank you so much. Bye-bye.